Housing. And you will notice that over time, the Christchurch housing market has just separated a little from the overall New Zealand market. And actually what that means is it's separated a little bit from the Auckland market, because the Auckland market dominates the New Zealand housing market picture. That is a really, really good thing. So Christchurch's housing stock now, I would characterise as very high quality and relatively affordable, compared to an Auckland situation where I would characterise a lot of it as relatively low quality and unaffordable. So that opportunity for us in particular is around the attraction of workforce. So we've got modern, safe, warm, new build housing at relatively affordable prices. There is still an affordability issue in the city, in particular for the lower paid, but overall and in particular in comparison to Auckland, Sydney, Melbourne, we have a far better affordability situation for our housing stock. That's been a good thing, because if you remember those migration levels, we've had record numbers of people moving into the region. And if we hadn't had that incremental housing stock, we would have seen more of an increase in housing values. And I'll come back and talk at the end about why there's a little bit of risk around house prices just at the minute. Rental levels, exactly the same scenario. So rental stock is now significantly improved from what it was prior to the earthquake. It's modern, it's new build, it's warm, it has lower operating costs than it did before, and it's got less expensive than it was at the peak of the rebuild. We think there's probably a little bit more to go in this, in terms of we think those prices will continue to fall a little bit, and that's because there is still an awful lot of supply coming on in the rental market. So there are a lot of properties being built that are intended for rental. Now that will be okay if our population continues to increase. But we already know that there's some construction workforce that will leave, and if migration was to dry up because of the tightening of the legislation around migration, then we do potentially risk a little bit of an oversupply in both the equity markets and the rental markets. So remembering the activity levels that we looked at, we know there's a lot of housing still to come on stream. So if demand was to flatten, you can probably estimate that with greater supply, prices may come back a little bit. If demand was to fall, in other words, we continue to have loss out of the construction industry, which we will have, and we weren't continuing to replace that with migration, which is what we've been doing, then we could see a little bit of a more challenging marketplace in housing emerge. Now, for those of you that were here 3 years ago, you will remember that we stood up and predicted that, and pretty much every developer in the city threw rocks at us. We talked to the Reserve Bank about this. We were bang on the money back then. We're on the money now. These things always occur at the tail. So they're always at the end of a boom is where you see your potential oversupply emerge. The underlying economy will support population growth in Christchurch and will continue to support population growth in Christchurch. So long as we can convince the people to come here, we will continue to see population growth in the city, and we will see it soak up that extra supply. But we need to have the right legislative levers to encourage that. And continuing to tighten migration for us as a region puts that at risk a little bit.